Imagine this for a second. The air just thick with the smell of cardamom, black pepper, cinnamon. For centuries, that aroma has pulled traders across oceans to the lush shores of Kerala in India.
It really paints a picture, doesn't it? A place that was this historical hub buzzing with exchanges that didn't just move goods, but actually shaped economies and cultures worldwide.
Exactly. But today, that incredible legacy, Kerala's long history of trade, is facing, well, a pretty serious modern challenge.
hmm
We're going to dig into a significant economic disruption, let's call it a tariff storm, yeah, coming from the United States.
That's right.
And we want to understand what it really means for the millions of people whose lives and jobs are tied to this really vibrant region.
Absolutely. And the trigger, the immediate thing we're looking at is this steep 50% tariff. It covers a whole range of Indian goods.
50%, wow.
Yeah, it's a U.S. trade policy decision, and it's set to take full effect on August 27, 2025, so very soon. And this deep dive is about getting to the roots of this crisis, looking at the potential consequences across key industries. You mentioned the spices, but also seafood, other traditional sectors.
Right.
And also how a region known for its resilience is gearing up to face it. It's more than just economics, you know? It's history, it's people, it's the future of these global links.
That human side is exactly why this matters so much, I think. It goes beyond just the numbers.
Definitely.
So we'll navigate through Kerala's historical weight in trade, get into the specifics of this new tariff, see how it's actually hitting communities on the ground, and look at how Kerala might adapt.
Sounds like a plan.
Oh, okay, let's unpack this. Because understanding Kerala's story here is, I think, really key to seeing the bigger picture of global trade right now.
Agreed. Where should we start? The history feels important.
Yeah, let's start there. To really grasp what's happening now, you need to understand Kerala's past. Think about it. Way before Vasco da Gama showed up in 1498.
Long before.
Its ports, places like Kochi, Kozhikode, they were already global trading powerhouses. You had merchants coming from Arabia, China, even Rome, trading gold, silk, ideas, all for those prized Kerala spices.
And it's hard to overstate how valuable those spices were back then. Black pepper, they literally called it black gold.
Right. Used as currency.
Exactly. And cardamom, cinnamon, nutmeg from Kerala, they weren't just flavoring food. They were defining cuisines from the Mediterranean all the way to the Far East. It really cemented Kerala as the spice capital.
And fast forward to today, Kerala's economy is still deeply, deeply tied to that agricultural and marine heritage.
It really is.
We're talking spices, of course, but also seafood, coir, that coconut fiber, cashew kernels, tea, coffee, big exports.
And the U.S. is a surprisingly crucial market for many of these.
It is. Millions of livelihoods depend on this, you know, farmers up in the Western Ghats, fishermen all along the coast.
Absolutely. The ripple effect is huge.
Just to put some numbers on it for context, in the 2024-25 financial year, marine products alone brought in 7,000 crore rupees. That's roughly, what, $840 million?
Around that, yeah.
And over 40% of that went to the U.S. market.
40%, that's significant dependence.
And spices added another 600 crore rupees, maybe $72 million from American buyers. But this reliance, it's now facing a major hurdle.
A huge hurdle. Which brings us to the tariff itself. We're looking at a very specific and pretty dramatic economic shock.
Okay, break it down for us.
The U.S. is rolling out this tariff hike really quickly. It went up to 25% on August 7th, 2025.
Right.
And then it jumps again to a staggering 50% starting August 27th, 2025.
Yeah.
This was all formalized by Executive Order 13329, which was announced August 6th. So bang, bang.
Just like that. 50% across the board, or are there nuances?
Well, the U.S. Department of Homeland Security stated it applies to Indian goods entered for consumption on or after 12:01 a.m. Eastern Daylight Time on August 27, 2025.
It's pretty broad.
Very broad. It covers most of Kerala's key exports. Textiles, gems, leather, marine products, spices, they're all hit.
Are there any exceptions?
There are. Notably, pharmaceuticals and electronics are exempt, which does offer some relief for India's wider economy, but leaves Kerala's traditional sectors really exposed.
And what's the justification given for such a steep hike?
Well, the official line from the U.S. administration points to India's continued purchases of Russian oil, arguing it undermines efforts related to the war in Ukraine.
Okay, so that's the geopolitical angle.
That's one part. But there's also history here. President Trump, you might remember, often criticized India's own high tariffs on American goods.
I do remember that, yeah.
And there were claims of, quote, obnoxious non-monetary trade barriers. Plus India's membership in the BRICS group, Brazil, Russia, India, China, South Africa, that's sometimes viewed as challenging U.S. influence.
So it's a mix of factors, potentially. Energy policy, historical trade friction, broader geopolitics.
It seems that way. It's complex. But the immediate effect is this massive competitive disadvantage for India.
How bad is it compared to other countries?
Well, get this. Vietnam faces a 20% tariff exporting to the U.S. Indonesia, 19%. Ecuador, just 10%.
And India?
50%. 50. Gives its neighbors in Asia and competitors like Ecuador a huge, huge edge in the U.S. market.
Wow. I bet Kerala's industry is in a really tough spot, doesn't it?
Extremely tough. Let's maybe delve into that ripple effect across Kerala's economy. Because it's not just one sector, it's a whole interconnected system.
Right, supporting whole communities.
Yeah, exactly. Take seafood first. People are calling it a sinking ship scenario.
That sounds dire.
It is. This industry employs nearly 1 million people in Kerala. 1 million.
Incredible.
And 90% of their marine exports is shrimp. And as you said, over 40% of their total marine products, worth about $336 million, goes to the U.S.
Okay, so highly dependent on that one market.
Highly. But here's the real shocker. The specific duty calculated for Indian marine products isn't just the baseline 50%. It's actually 67.7%.
67.7, how does that compare?
Compare that to Ecuador, a major competitor in shrimp, paying only 10%.
That's almost impossible to compete with.
Precisely. I spoke to Anil. He's a shrimp processor in Kochi, been doing it 15 years. His fear was palpable. He said, we were already struggling. Fuel costs, competition, now this 67.7% tax. Our orders might just stop if that happens. He trailed off, but the implication for his family was clear.
Yeah, that really brings it home, the human cost right there.
Then you have spices, the very soul of Kerala's trade history, you could say. Now they're at risk of, losing their flavor in the global market.
And the U.S. is a big buyer there, too.
A major buyer. Cardamom, black pepper, cinnamon, nutmeg, turmeric. The American Spice Trade Association is already warning about price hikes and falling demand.
What are farmers saying?
I heard from Lakshmi. She farms cardamom in Idukki. She put it very simply. A 50% tariff is just unsustainable.
How so?
She said, the U.S. was our biggest buyer. If they stop, we sell locally for less. Or the crop rots. Farming's already risky, she said, with weather. This tariff makes it feel impossible, finding new markets that quickly. It's a massive hurdle.
A huge challenge. And what about other traditional industries? You mentioned coir and cashew.
Right, centered in places like Alappuzha, the coir capital, and Kollam. These employ tens of thousands, often women in rural areas.
And the U.S. was important there, too.
Very. Around 37% of India's coir exports, 46% of cashew kernels went stateside. Now they face fierce competition from Sri Lanka, Vietnam, places with lower or no tariffs.
The impact could be widespread unemployment in those specific regions.
Exactly. Deeply embedded community livelihoods are at risk. And finally, don't forget tea and coffee.
From the hills, Wayanad and Idukki.
That's right. Those plantations send maybe 20–30% of their exports to the U.S. That's about 250 crore rupees a year.
Not insignificant.
Not at all. But the tariff could easily push U.S. buyers towards cheaper options from, say, Kenya or Colombia,
leading to reduced hours, layoffs.
It's the likely outcome for many plantation workers who rely on those daily wages.
It's striking how these percentages and trade figures translate so directly into everyday anxieties for people across the state. It puts a human face on these often abstract economic policies.
Absolutely. And it doesn't stop at the state level. This connects to the bigger picture for India, too. A major drop in export earnings like this weakens foreign currency inflows.
Which affects the rupee.
Right. It could devalue the rupee. Look at the trend. January 2025, $1 US was about 83 rupees. By August 7th, after the first hike, it was already 87.70.
And analysts are predicting.
Some predict it could hit 95 rupees to the dollar by November 2025 if this continues.
Which means imports get more expensive for India.
Exactly. Higher import costs, potential inflation. And we've already seen the Reserve Bank of India hit pause on planned interest rate cuts, likely bracing for these pressures.
And this isn't just happening to India, is it? The U.S. has imposed tariffs elsewhere.
No, it's part of a broader pattern. The U.S. has tariffs of varying levels on goods from nearly 70 countries. Brazil is also facing a 50% duty. Pakistan's at 19%, Sri Lanka 20%.
So the stated aim is reducing the U.S. trade deficit.
That's the official rationale, yes. But the risk, clearly, is disrupting global supply chains and causing wider economic instability.
It also seems to put a strain on diplomatic relationships. You mentioned India and the U.S. were moving towards a stronger partnership.
They were. There was talk of a mega partnership for prosperity. That phrase came up during Prime Minister Modi's visit to the White House in February 2025.
But these tariffs must complicate that.
Undeniably, they directly challenge India's aspirations as a rising global economic power. Goldman Sachs estimated this could knock zero point 0.6 percentage points off India's GDP growth.
That's significant. And considering the scale of trade, what were the figures again?
India's annual exports to the U.S. were $81 billion in 2024 and hit $86.51 billion in the fiscal year ending March 2025. These tariffs impact a huge chunk of that vital relationship.
So despite this, really challenging outlook, Kerala does have a history of resilience, right? They've faced floods, the pandemic.
They have, and they're not just standing still now. Industry leaders, policymakers, they're actively exploring strategies to try and cushion this blow.
What's the main focus?
Well, the immediate priority is diversifying markets.
Right.
That's the textbook response, right?
Looking beyond the U.S.
Exactly. The Indian government is pushing exporters to look hard at places like China, Latin America, the Middle East.
Is there potential there?
There is. China's middle class wants seafood and spices. Gulf countries could take more coir, more cashew. But
it's not easy.
It's really not.
Yeah.
The challenge for Kerala is replicating the sheer volume and, frankly, the established relationships of the U.S. market quickly, especially for high-value things like shrimp. It takes time to build trust, logistics. It's a race against time for vulnerable communities.
So diversification is key, but difficult. What else? Are they looking inwards?
They are. Strengthening domestic industries is another angle, encouraging innovation for spice companies. Maybe focusing more on processed goods, spice blends, ready-to-cook mixes, things with higher margins.
Value addition.
Precisely. For the coir industry, maybe pushing eco-friendly products like biodegradable packaging, tapping into that global sustainability trend.
And government support.
Yes, the Kerala state government is looking at financial aid, subsidies, low-interest loans specifically for exporters hit by this, recognizing the impact on jobs.
And then there's the diplomatic track, I assume.
Of course. Advocacy and diplomacy. Nationally, India's External Affairs Minister S. Jaishankar has publicly called the tariffs unjustified and unreasonable,
taking a strong stance.
And making the point about India's energy needs for 1.4 billion people. Prime Minister Modi also spoke recently, assuring people of India's ability to withstand pressure, focusing on farmers and small producers.
And at the state level.
Kerala's government is drafting a detailed memo to the central government asking for concrete support, tax breaks, export incentives, things like that.
It really highlights this delicate balancing act for India, doesn't it? Managing energy security, geopolitical ties, while trying to protect these vital export sectors, especially in states like Kerala.
It's a major tightrope walk, no doubt about it.
So we've traced Kerala's journey, this ancient spice hub, now a modern export economy, facing this pretty daunting tariff storm from the U.S.
And I think the story really underscores how interconnected everything is. Decisions made seemingly far away ripple right down to local communities.
Affecting real people like Anil, the shrimp processor in Kochi, or Lakshmi, the cardamom farmer in Idukki. Their stories make it tangible.
Exactly. But it's also a story of resilience, isn't it? Of adaptation, that human drive to innovate and find a way forward.
Absolutely. And for you listening, hopefully this deep dive gives you a glimpse into that complex dance between global trade, politics, and local lives. It shows the real-world impact of policies that can sometimes feel very distant. As Kerala navigates this, it's kind of a testament to how places with these deep trading roots continue to adapt.
It really is.
Yeah.
Maybe here's a final thought to leave you with.
Go on.
How might these kinds of trade conflicts, these tariff wars, change things in the long run? Could they push nations towards more self-reliance? Or maybe, counterintuitively, force new, perhaps unexpected global alliances and totally redrawn supply chains?
That's fascinating.
And what could that ultimately mean for, the flavor of the spices in your kitchen or the shrimp on your plate if the world's trade map is constantly being reshaped? Something to think about.